If you look at the wealthiest people, look at the billionaires, the centimillionaires, the people with the most money, they have organizations called family offices that will help them invest and manage and allocate their resources, their capital.
All right, guys, my name is Julian, and today I have the lifestyle investor, Justin Donald. And a quick intro, I found out about him through a dear friend of his, Cody Sanchez. She does contrarian investing, and so it's an honor to have him here. So Justin, how are you today?
I'm doing great. I'm excited to be here and, to really get some time with you and your community, Julian. So thanks for having me on the show.
Yeah, it's an honor to interview you. So I want to, start off like, what inspired you to become the lifestyle investor?
Well, it's funny. I never thought the lifestyle investor would take off and become what it is today. To me, this was a passion project, a hobby. It was what I was spending my time doing for fun. And I guess, inside of a small group of people that said, "Hey, I think you got something here," and it was kind of like an investors club, and we would learn from each other. We'd bring in, some people that were smarter than us on certain deals or in certain mechanics of doing a deal. We just learned and grew and had fun. And it was this whole idea of like, let's do life together. We can do business and life together. And once we really started making a lot of money, they're like, you need to start charging for what you're doing. You need to create like an actual community out of this. So that's really where things kicked off. I mean, I had done some private coaching in the past, and then we started building with those clients the Lifestyle Investor Mastermind. And the book really came around the same time that was kicking off, and the podcast as well. So, my podcast is, almost each one was like one after the other in inception, but I just never thought that they would take off the way that they have and gain the traction that they have. I didn't think, I don't consider myself an author. So to have a #1 Wall Street Journal best-selling book and, USA Today best-selling book is flattering. And as of 2023, it's the top 1% of all books ever sold, which is crazy to think about. But I'm honored because all the proceeds of the Lifestyle Investor go towards fighting human trafficking. So we've been able to donate hundreds of thousands of dollars to combat, just people in that space that are doing horrible things. So it's an honor to have such a cool community and brand. But it's really special to actually have it mean something more than just, there's the education piece and there's helping people find financial freedom, but then the monetary piece is helping people buy their real human life freedom back.
Yeah, I love the cause. I love the vision. It's incredible what you've built for sure. So I want to get into it. So how do you define a lifestyle investment?
Yeah, so I guess the whole genesis of it, and by the way, when I coined the term lifestyle investor and lifestyle investing, it was interesting to me. I figured in my head, like, this just seems so popular, like this has to be out there. And I was surprised that it wasn't. And so I started building content around it. Mm-hmm. And the idea of becoming a lifestyle investor is simply this, not trading time for money, that your assets produce more than enough income to cover your lifestyle so you can buy your time back, spend it the way that you want with those that are most important to you, with loved ones, with friends, with family, but then also on projects and passions that, that means something, right? Instead of just, most people have to work. I like buying time and freedom and space back to have the privilege to work. You get to work, and it's a different mindset when you don't have to work.
Yes.
I think that you shift into doing things that are more fulfilling and are inspired by and through your natural gifts.
Yes. I think that's a lot that people want to do nowadays. And it's interesting. So, can we hear about your first investment and what was the cause of it, and so that we can get aligned with your investment philosophy?
Sure. Well, I mean, my first investment was a horrible investment and I lost money. And it was, I mean, the greatest learning experience I had, but at the time it was the most painful thing I had ever experienced because I didn't feel like I had the money to lose, So I decided to buy a place that it was where I was living, but I was in Chicago. I was in a mid-rise. It was the top floor of this mid-rise building. And shortly after, I ended up getting this promotion at the company that I worked at to move out of state. And so, I mean, I didn't even live there 3 months and I turned this thing into a rental. I have learned that condos may not be condos with a high assessment fee with, parking, there's a lot that goes into it. If I were looking at this from a straight rental, I would have made different decisions than, buying it personally, turning it into a rental. That wasn't the right play. And I definitely mistimed it. The market crashed. I bought it. Let's see, right around 06. And then I tried selling it I should have sold it right away, but I ended up trying to sell it in 08, 09, 2010, and just took a haircut on this thing. So my real first experience with investing was just not anything that I thought it could be. And most people are like, well, why'd you keep doing it then? Well, I think I learned that I need to treat my home residence different than I treat my rental properties. And that was a great lesson for me. And the fact that you could actually lose that much money, that the market could shift, like all these things I had never considered. I remember my parents saying, hey, you're buying a condo that's more than our home. It costs more than our home. Are you sure this is what you should be doing? And I was like, oh yeah, I'm going to be fine. I know more than you know.
Yeah.
And obviously that wasn't the case. And it was a tough pill to swallow.
Yeah. Okay. So your first investment wasn't the home run you expected, but you did have eventually an investment where it aligned with your lifestyle investor philosophy. So can you tell us what was that?
Yeah. Yeah. So once I got a little bit more clear of what my lifestyle investor mindset and mentality was, is that I wanted to buy my time back. And instead of trading time for money, which is what I had been doing. And by the way, I had moved up. I had built some systems around a business that I had started. But to a certain degree, I was still a slave to the business I had built. I would tell people I own a business, but really the business owned me. And it was hard to fully remove myself. And I just knew that wasn't serving my needs the way that I wanted long-term. Right now, this is a season and I can make it happen, but I don't want to be working crazy hours during peak season or, on the weekends every day in peak season. Like these are things that I don't want. I don't want the pressures of it. And so I just made the decision, hey, I'm going to buy the thing that I know best is how to copy other people. And I copycatted one of my friends who learned from one of the authorities in the mobile home park space on how to buy, income producing mobile home parks. And so I figure if my friend can do it, I can do it. And I ended up becoming friends with the guy who was later to become my mentor, Frank Rolfe, who is the largest private owner of mobile home parks in the US. And he took me under his wing. I learned a ton from him. And I bought my first property, and that first park that I bought, in one fell swoop, that thing replaced my wife's income almost to the dollar, a little bit more than what she was making. So she was a teacher at the time. We had talked about having a family. Our schedules weren't super aligned. So this bought her time back. And then shortly thereafter, I bought another park. That one covered our really like our survival income, like just enough to get by, which was a huge weight off my shoulders because then I didn't have to work. And then I bought another property that covered our lifestyle income, what it cost us to live on a monthly basis, sold that property, and then flipped it into two others that were even better performing assets. And then that exceeded what I was earning at the time in active income, like what the business was producing. which is crazy to think about.
Yeah.
So in a short period of time, I learned, number one, I had a business that I owned for a year and a day. And I'm sorry, a park that I owned for a year and a day that I flipped. And that single transaction made me more in a year and a day with literally no more than 5 hours a week. That made me more than I made in my business for everything, for all the hours I was spending. And I just had this epiphany of, I don't need to make more money. All I simply need to do is just cover where I'm at. And that way I don't have to work crazy hours.
Wow. That's amazing. So the real cause was you wanted to have a family, and you found a way to do that, and mobile home park investing was it. And so
that's right. Yeah, that was the start.
Yeah. And so, what you prioritize freedom and flexibility in that investment choice. Is that right? And do you continue to do that?
Yeah. And the reality is I probably could have transitioned out sooner than I did. But the reason I didn't was because I was afraid that I may not be able to replicate the same income. See, in my mind, once I had replaced my earned income, my active income, I would just walk away. My friends thought I was crazy. They're like, "What? You're going to leave? You could make twice as much money. You're doubling up." But my goal was never to make more money. My goal was to buy my time back. So it wasn't a tough decision for me to walk away. What was interesting though is like figuring out what's the right amount to work, and what is my purpose? What's next? Now that financially I'm free, what do I want to do with my life? Like, before I was bombarded. I was living a world and a life that was totally reactionary. I'd go from thing to thing to thing to thing to thing. And I would just react to the world, versus now I'm living this proactive life. I can choose how I want life to look. I can kind of do life by design, not life by default. And it was really incredible. But with the free time, it's like, well, what's next? Like, where's my purpose? What should I do? And that was a really fun season. I took a year off. My family traveled the globe. We went to 13 different countries that year. And I just gained clarity on what the next chapter of life would look like. And that's really where the Lifestyle Investor was born.
That's amazing. Wow. I'm so happy to hear that. So what are the most common misconceptions about lifestyle investing?
Well, I think sometimes people think it's like it happens overnight, and it doesn't. It may look like an overnight success, but it rarely is an overnight success. Very rarely does someone have a major windfall of cash or sell their company for millions of dollars. It's a rare situation. Most people will never experience that. And it's more than anything, just a series of choices, taking one step forward every day, and slowly growing that passive income. So sometimes people think, well, how do I do this really fast and in one fell swoop? And I think it's not that. I think it's like you do a deal and you cover your utility bills, and you do another deal and that passive income covers your car payments, and you do another deal and then that one covers your mortgage, and so on and so forth. It slowly adds up. And instead of trying to hit a home run, it's like, let's hit a bunch of singles and doubles. So that way we don't lose money, and we can slowly and incrementally create the passive income that we want.
Yeah, I like the way that sounds. Definitely. It's a lot different from most investment perspectives. So in terms of like your background, how did that influence your investment strategies?
Well, one way is that I didn't ever want to buy a job. So a lot of people invest in a way that they buy this business that then they have to run. And that to me was a non-starter. So, in my book, The Lifestyle Investor, I lay out my 10 commandments or my 10 criteria for, basically creating passive income, creating cash flow. How do you do it? And the number one commandment, my number one rule is lifestyle first. So I wanted to invest in a way that supported my lifestyle, that was congruent with what I wanted, what my wife wanted, what we wanted for our family, for our daughter. And we never wanted to buy a job. So if we're buying a business, it either needs to come with an operator, or we have an operator. More, what I would prefer is that we have our own operator that steps in, that runs it, that is fantastic, rather than taking over existing. If we're buying real estate, that we have someone that can run that property, that can manage that property, so it doesn't fall on our shoulders. So a lot of decisions that we make, then we can look through the lens of, does this help our lifestyle, or does this hurt our lifestyle? Is this going to take more time away from us and the family, or is this going to give more time back to the family? And so I think for people, they really need to get clear on what their ideal life is, because the life that I lead and the one that I live is great for me, and it's great for my family, but it might not be someone else's desired life. Some people might really like it, but other people might say, hey, I don't have a family. I would, I think I would live life differently, and I would go travel the world all the time. And, whatever it is, I think we got to gain clarity on what it is that's most important to us. And instead of living this life by default and really kind of like just being reactive to everything, going on the offense and creating a game plan for what an epic life for you looks like.
Yeah, that's amazing. What is one question, that really distills what a person looking to do lifestyle investing could become clear about what they want?
Well, I mean, I would say, how much do you want to work? Where do you want to work from? What type of work do you gain satisfaction and fulfillment from? What are your natural gifts? What do you lose time doing? Like when do you get into like a zone of genius, or when does time pass so quickly and effortlessly that you lose track of it? Like, what are those things that you're doing? From a family standpoint, do you want to get married? Do you not? What does travel look like? Do you want to travel the globe? Do you want to take, 1 or 2 trips a year? Do you want to take 10 trips a year? What type of home or vehicles do you want to have? I mean, we could get really granular on this, and I think the more granular you get, the better. But to at least have a starting point of, hey, I want to earn this as an income, and I want to be able to, travel this much, retire at this point, those sorts of things.
Yeah, that's a great start for sure. So, what's the most challenging investment decision you've ever made?
I've had several of them. Sometimes it's, do you invest in the first place? Sometimes it's, do you invest more when a deal hasn't gone as planned?
Mm-hmm.
Sometimes it's, is there a way to, like, what's a way that I can add enough value to this deal to feel like I'm giving it my all? So we could go in a bunch of different directions here. I think it's always painful when a deal doesn't work out. And I think it's important to realize, as an investor, you're going to have deals that don't work out. Not everything goes as planned, but the overall portfolio goal is to win more times than you lose, and to win bigger on the wins and lose smaller on the losses. So there's no one out there that's going to go through life and never have a deal go bad, right? There's no one that's going to have everything just work out. And so then it's, how are you going to respond? And I actually think one of the more important questions is, before you ever invest, what's your investment criteria? What is it that's important to you about making an investment? So instead of making a decision in an emotional state, when things may be really great or really bad, like, what are the decisions you can make in a strong state ahead of time, and questions that you can ask yourself to see if some deal fits your criteria? So I've had some mistakes where I've gone outside my criteria and a deal didn't work out, or a team didn't work out, where, I invested in a Ponzi scheme once. I had another deal where an operator ended up kind of embezzling or stealing funds to, I guess, prop up their own fancy lifestyle. So, I mean, I've had those, and those are painful situations, and, you've got to get legal involved, and it's an interesting path on that side. And then I've had deals that have gone extraordinary. We just did a deal in the Lifestyle Investor Mastermind that in 18 months, it was less than 18 months, and we had a 74% return on our money on a very low risk deal with good collateral. So that was a big win. So we get a little bit of everything, and I could go down many different genres of deals, but sometimes it's, did I do enough due diligence early on? There was a deal where I didn't do background checks, and that came back to haunt me. So now I do background checks on every deal that I do.
Yeah.
So that's helpful.
Yeah. Thank you. That is helpful for us here at the Real Estate Investors Group. We're dealing with real estate all the time. So yeah, we really appreciate that.
And by the way, some of these things I'm talking about are real estate. It's that the syndicator or the GP, the sponsor, they didn't allocate funds properly. They didn't have enough controls in the operating agreement for the limited partners to be able to do what they need to do. So like I'm giving warning to what could go wrong, even on the real estate side of things.
Yeah, let's talk about some of the biggest mistakes that new investors make.
Well, one of the biggest ones is just doing a deal because their friends do, and because you think that your friend knows more than you. So therefore, if they're investing, they must have done their homework. They must have done their due diligence. I see that all the time. Investing in people that have only done well over the last 10 years. Last 10 years, everyone has done well. Up until, maybe 6 months ago. Now we're starting to see some fallout, but just because someone did well in the frothiest, best environment that most of us have been alive, does not mean that they're actually good at what they do. They did well in a hot market. Who has performed well in a down market and an up market? Who's gone through a recession? How did they perform? I'd say whatever a pro forma says, the pro forma to me is pretty irrelevant, because you could put in there whatever you want to put in there. I want it to be conservative and I want it to make sense. But what I care more about is your pro forma on your last 5 deals that you've done that have gone full circle. And what was your original projection compared to your actual outcome? What were the returns? Like that to me matters. I could go on and on and on. Are you using, most people in the last 10, 15 years have used a lot of floating rates and bridge loans. So, short-term and not locking in long-term debt, which for a period of time, it worked great. But I told a lot of friends that I didn't go into deals because I didn't like that type of, that risk profile. And so maybe I missed out on some wins, but I'm in no deals that are unraveling right now because of not locking in long-term rates, right? Or having too short-term of debt. So that to me is like a huge win. And I think most people missed that. Most people just thought that things were going to remain easy.
Yeah, totally. Yeah, I can totally see that. What other kind of investments is a lifestyle investor a part of, in your philosophy or in your group?
Yeah. So the philosophy is, if it's a good deal, we want to do it. I want to have exposure to all different types of investments, because what do the wealthy do? If you look at the wealthiest people, look at the billionaires, the centimillionaires, the people with the most money, they have organizations called family offices that will help them invest and manage and allocate their resources, their capital. And if you look across the board, a lot of these reports are public. A lot of these reports you got to pay for, but the wealthiest people in the world have an asset allocation across many different things. So real estate's one of them, and it's generally about 25% of their portfolio. You've got private equities about 25%. Public equities can be up to 25%. A lot of people right now are, as low as 10 or 15% there. Then you've got everything else.
Can you explain what private equity is and public equity for the people that don't know what that is?
Yeah. So public equities would be just the stock market. You're investing in some way, shape, or form in a money manager that's managing it, or you're just investing straight into indexes, which is your cheapest way of getting, of investing in, the U.S. economy, right? U.S. companies, and there are other stock markets. Other countries have their stock markets as well. Private equity is just private companies, so not listed on the stock market. These would include venture capital deals, so early stage companies. They would include other private companies that might be really big and really well known before they go public. I think if you look at the wealthiest people out there, over half of their net worth is in real estate and private equity. So most people don't realize that. And because of that, they have all their money either A, wrapped up in their business if they're an entrepreneur, and whatever's left is in the stock market, or B, if they're on the corporate side of things and they don't have a business, it's generally wrapped up in the stock market. Maybe they do a little bit of dabbling with real estate. So most people, I think, don't look at this overall asset allocation. So the deals that I do, I want to get exposure to everything. I want to be in, we've done music royalties, we've done e-commerce, we've done original content, cannabis, hemp, CBD. You name it, we've probably done it. Wine, bourbon, whiskey, scotch, every type of real estate under the sun. We do a lot of industrial and mobile home parks and self-storage. We've done some land, we've done some apartment complexes, but a lot of that's kind of overvalued right now. Outdoor industrial storage, I love. Technology plays. I think technology is always going to be one of the things to invest in. We've done a bunch of AI and robotics, and the list goes on and on. So my goal is to have exposure to everything, because no matter if the market is if our economy is cranking or if we're in the toilet, I want to have the majority of my portfolio, or at least part of my portfolio, that's performing well.
Yeah, I totally understand that. And would you say, what would you say right now is the sectors that you would focus on, or would suggest someone focuses on right now?
Well, I still like mobile home parks, because there are many reasons. Whenever there's supply demand exists, where supply is limited and demand's greater than supply, I love that. Outdoor industrial storage for similar reasons. Hard to get the zoning on each of those, and each of those I think is great. Just industrial in general, I think we're going to just continue to see a rise in e-commerce. So those to me are fantastic. If you can get the right self-storage and multifamily, like at a good price under market with good rates, then I like that. But it's just hard. There's been too much competition. It's been too efficient of a market. It's been bid up too much. So it's possible to, but it's just a lot harder to. The other ones are not as mainstream. They're not as institutionally consolidated. So on the real estate side of things, I like that. But also technology is going to be, it's always going to be in vogue. The right technology is always going to be an incredible play. But from the standpoint of real estate, I think you asked me specifically real estate, those are probably the three niches that I like best.
Got it. All right. Thank you. So we spoke a little bit about your failures. So what is a way that you deal with setbacks?
For me, my goal is to surround myself with more people that are playing the game of life and business, wealth creation at a higher level than me. So I'm always trying to get in the rooms of those people, whether it be hiring a coach, hiring an expert, joining a mastermind, getting in some sort of community or proximity around other people. So if I want to make better decisions, then I need to get around people that know how to make those decisions, that have figured out how to make less mistakes and have more wins. So to me, that's my two greatest hacks to that learning curve and to figuring things out and making less mistakes, not more mistakes, is really just the quality of expertise in the people that you spend time with and how intentional you are to get around them. When I first started, I didn't know anyone that was an entrepreneur. I didn't know anyone that was like highly successful to the level that I was hoping someday to be. And so I had to work really hard to find them. And for a while, it was just books. I would read books because I had no one else to turn to. And then eventually I started meeting some people and then asking them, hey, who do you know that, runs a business, or who do you know that is a great investor. And over time, I built that network, but it took time.
Yeah. So when it comes to building that network and the people, what would you say is, one or two things that you recommend that one person join, and how much would that run them, for example, just so they have a plan of what they can do in the future to get there?
Yeah, I mean, these masterminds run price point wise, probably the lowest I've seen is probably like 10 or 15 grand. The highest I've seen is 150 grand. Everything in between. I think generally speaking, 25 to 55 is kind of that sweet spot where I think the more established, more credible investors, entrepreneurs, corporate executives, kind of like where they go and where they spend their time. So I've just joined a bunch of groups like that. I mean, I'm in probably 8 different communities like it, and I've got my own. I built my own community because I could never find exactly what I wanted in all these other communities. So I said, well, I'll just build my own. I'll start Lifestyle Investor and create a mastermind out of it, that goes beyond the book and the podcast.
That's really cool. And when you were creating your own mastermind, what are some things that you valued that you wanted to bring into your own mastermind?
Well, one of the things is in a lot of groups, I would meet a lot of people that were not like right fit for me, like values were not aligned, or maybe they were at the beginning of their journey and I was looking for people that had a little bit more expertise. And I'm always happy to mentor and help, but I also need people that I can, pick their brain. So I was part of groups where, I don't know, maybe there are 100, 150 people, 200 people, but I had to really dig and search to find the one or the two that was the right fit and someone I could learn from. I think one of the highest, most important like hurdles or criteria for me today is I want to be in a group that it's like all A players and everyone is playing at the level or above the level that I'm at. I'm really comfortable being the smallest fish in the fish pond, right?
Yeah.
That to me is fun. And I'm an eternal student. I'm curious by nature. So I love to learn. And that would be like a big criteria to me is finding people that are really playing at that next level.
Yeah. And so how do you get those people that are playing at the next level to join your mastermind so that you can be around them?
Well, we just have an incredibly high criteria to get in. So, we take, we're taking hundreds of applications a year, but we are letting in a super small percentage of those because we just want the right fit. So I think the higher the standards, the higher the criteria, the more likely it is that you enter a room where you don't have to wade through anyone. It's just 100% perfect fit for anyone that you would talk to. So I always look for that. I always look for, what do the members look like? How aligned are they in values? How do they show up? Like, what's their experience? What's their history? Because today, everyone is an expert of something and a life coach and a whatever. It doesn't mean that they actually have the qualifications, but with social media, a lot of people brand themselves that way before they ever are. And maybe they even never get to that point, but people that don't do their homework don't know that. I only want to be mentored from and by people that have actually done it. Like if you have accomplished the thing that I want to do, then I want to seek your help and your wisdom. So I think when you have high standards, you command a high price point. You bring in best in class. My goal is that anyone who speaks is best in class at whatever they do. The deals that we do are outlier deals that no one else will have access to, that will get terms that no one else will be able to get, that are just, totally premium preferred terms, tax strategy that most people don't even know exists. So people can cover their costs just in the savings on taxes, and then just awesome people to connect with and do life with. So to me, it was solving for those things. And when we did that, it created just an amazing community.
It's amazing. I'd love to hear that. And so how do you balance the passion projects and the profitable projects?
Well, I think at a certain point, we've got to make sure that life is covered. But once life is covered, Everything kind of becomes a little bit more of a game. I mean, the moment that your lifestyle expenses, whatever it costs you to live, the moment those are covered by passive income, not requiring any time for you whatsoever, it opens up this whole world, this creative, just a blank canvas of what you can do. And I found just this creativity I never thought I had just started coming out because I didn't have to do anything for money. I stopped trading time for money, and I really just focused on what is it that I really enjoy. So that, to me, solving for that opens the playbook. And a lot of the decisions that I make have nothing to do with money, but because I enjoy them so much, and I want to see it through, that they do well, they end up financially also doing well. If I'm finding something that really solves a problem, or kind of fits into a niche, solves an issue that adds incredible value to people, it's amazing what happens. But maybe I wouldn't have had the time or space to think through that if I had a job, or if I had a business that, kind of owned me.
Yeah. Yeah, that's great. How has your book, The Lifestyle Investor, changed the conversation around investing?
Well, I think it has opened up the door to looking at investing a different way. What our country, and you'll see this in other countries too, but here in the US, Wall Street really has done a great job of conditioning people to think that there's really one way or very few ways to invest. And those ways are to give them money and to let them manage it. So the number one way that most people invest is through a financial planner, through a 401k, through some sort of like a money manager doing this, or their company is moving it into an account that they have, someone that's doing it. And that's, Wall Street wants you to think that's the only way because they want a piece of everything. I just want to share that there are other ways to do it. And often the way that the money managers do it is misaligned. They don't outperform the index. The index is the cheapest way to get exposure to the stock market. And only 5% of money managers the last 15 years outperformed it. So most people pay more money to have someone perform worse than what they could have done if they had just bought an index. And then the same people that the last 15 years outperformed the market didn't the 15 years before that. So like, if you look at who's actually done it for 30 years, it's no one, right? So that just tells you all that you need to know. It's high fee. The results aren't even as good as if you just invest in indexes. And the allocation that is touted as the safest allocation split, with 60% stocks and 40% bonds, that's what all these money managers are saying. This is the safest thing you can do. It was literally one of the worst performing of 2022 in the last century. In 100 years, that was the worst performing portfolio. So I think people are waking up to the fact that there are better ways. There are different ways, like real estate. Your group's big on that. That's one of the great ways to build wealth outside of the stock market. And inside the stock market, it's so efficient, it's hard to make money. You're fighting against algorithmic trading and quants that are smarter than you and 20 of your friends put together, right? And I mean, they're so smart, like so much smarter than I'll ever be. So how am I going to beat that? Like, maybe I can hire teams, but it's so efficient, it's hard to make money. I want to be where it's inefficient. That's where it's easy to make money. The inefficiency is what creates that arbitrage or that opportunity. Just like real estate. By the way, real estate, way more inefficient than the stock market, right? Some sectors of real estate are way more efficient than other sectors. I want to be in what's the least efficient because that's where the most opportunity lies.
Yeah. So I want to put some numbers to this conversation. What is the return that people get when they're investing with the index? And just so people know, what is the return that they should aim to get if they are going to do a financial planner route, or if they're looking to invest by themselves or with the group?
Yeah, I mean, if you're looking at this short term over just a year or two time frame, it's going to fluctuate a lot. I think long term, People have talked a lot about 10% over the years, but if you look at it, I mean, it's hard that even that's hard to be consistent. So I would say to really play it safe, to make a good plan, it's 8%, and you're going to have taxes on top of that and fees on top of that. So 8% doesn't really equal 8%. It's probably a lot less. When you're doing real estate, find the right group, the right sponsor, a deal off market, a deal under value, you can likely be clearing double that and have the depreciation to offset your income. So maybe you're not taxed at all, or you're taxed much less. And that, depreciation or you could do different strategies to defer those taxes even further out. So there's a lot of advantages on that side, but yeah, it's for people that have a lot of money in the stock market, they're really banking on it being a good performing market at the time that they're retiring, because if it's not the case, they're in trouble. I mean, during the last recession, people lost the market's come back, but just because a market went down 50% and back up 50% doesn't mean that all their money's back. They actually lost money. If you lose 50% and then make 50% back, that is a net loss. And most people don't think about it that way. So if you retired in that 08 to 2012, you couldn't possibly have like the time of life left to build back what you once had.
Yeah, I totally understand. Yeah, so I want to get into how you do your day to day. How do you schedule for fulfillment?
Fulfillment meaning just things that I enjoy?
Yeah, whatever that is to you.
I mean, I do an extended weekend every weekend. So I generally work Tuesday through Thursday. I generally don't work before noon. I do a lot of personal, self-care or reading or working out in the mornings. I like to work in the afternoons. Generally, I'm done by 5:15 or 5:30 and do family evenings every night. I don't work on the weekends, and Mondays I try to keep open in case I have any creative ideas, and Fridays I keep open for a date day with my wife, and then an afternoon where I get together with friends or new people. I've got something that I've done for over 20 years is I've taken someone to coffee, lunch, dinner, once a week, at least once a week for over 20 years. And that has really kind of built my network. And I just take people that I want to learn from who knows more than me on something. And the bar is low, but the more people I've met and the more people I've kind of connected with, the impressiveness of the resume has grown, and so I feel like I'm lucky to sit in these rooms and at these lunches and coffees with just some world beaters, amazing people that I've gotten to learn from over the years, and that education is compounded over time. So Fridays, I like doing that. Sometimes I do that on Mondays. Sometimes I do it both days, depending on the schedule, but I like keeping them open for me and for my family and for my friends and for creativity. And then just try to have a good work day, Tuesday through Thursday, 12 to 5, 12 to 5:15.
That's cool. That's really cool. You're not working yourself to death. You're definitely enjoying yourself and taking a lot of coffee with some cool people. And for the person that wants to start a habit of doing what you're doing, which is taking out a person once a week to coffee, what is the right approach to do that so that they can be successful?
Well, I think you just have to ask, and you have to recognize that some people are going to say no. Some people are going to be busy. Some people aren't going to get back to you. They're not going to respond, and you got to have some thick skin. But if you ask enough people, you'll find someone to take out. And then just always treat, even if they want to pay. It's amazing how many times I have paid for people that have made way more money than me, way more successful than me. They insisted, they wanted to pay, but my act of doing it first, or insisting over their insistence. I've had so many people say, wow, like I can't remember the last time someone picked up a meal for me. And so I think it's meaningful sometimes to those that can afford it, right? And this is even when I couldn't afford it. It was like, okay, we're going to go to coffee because I don't even have enough to do a dinner or a lunch. I was scraping pennies together, but that's all right. I valued my education. And I think you just have to start. You just have to ask someone, hey, can I take you to lunch? Can I take you to coffee? I'd love to pick your brain, coffee on me.
Yeah, that's amazing. I love that philosophy. And when you think about your previous history, what has been the most transformational book you've read apart from, the one you've created?
Yeah, I mean, for me, it was probably Cash Flow Quadrant. I mean, that book by Robert Kiyosaki really blew my mind. I read Rich Dad Poor Dad, and that was like the start, and that got me interested. That got me eager to learn. But Cash Flow Quadrant really is what took me from this idea of going from employee to business, or really as employee to self-employed, and then from self-employed to business owner, and then from business owner to investor. And on each side of the aisle, one side, you're taxed a heck of a lot more than the other side where you're not taxed. And I was like, I want to live on the side where I'm not taxed. And I want to live on the side where I can make more and I can have more impact and I have less demand on my time. And I just had this epiphany that I thought I was a business owner when in reality, I was a sole proprietor. My business was running me, even though I thought I was running it. And that I also just wanted to get out of business altogether, that I didn't want to be running it. I wanted to find a way to support it financially and with my network. So I want to be involved in it, but I don't want to be the operator of the business.
Yeah. Yeah, that makes a ton of sense. A lot of people are definitely misinformed on where they are in the cash flow quadrant. So that's going to definitely get them to realize the real thing. I want to know what's the most rewarding part of your work and why?
Well, it's definitely helping people achieve financial freedom and have big wins, having a big exit of their company, or finding an executive team or executive that can replace them so they can step out and actually buy their time back and have a business run without them. So for me, I achieved financial freedom and it was one of the greatest experiences I've ever had. But after that, it's kind of like, okay, that was cool, but what's next? And inside of my community, I get to celebrate with people all the time that they're achieving financial freedom for the first time. They don't have to work anymore. And it's really exciting. So for me, I get to relive that with regularity. And that is something really special for me.
That's amazing. Yeah, thank you for sharing. So I guess we already touched into it, but what's your favorite way to unwind and relax?
Well, I love sports. I love movies. I love food. I love to travel. I mean, those are probably all my favorite things. I play sand volleyball every Saturday. I love 2-on-2 volleyball.
It's cool.
I love good meals. I love traveling the world. I love experiencing different cultures. Like that to me is so much fun. I love music too. So, anything there, I think, and just hanging out with people. I love getting time with friends and family.
Yes. And hanging out with people, how do you cultivate and maintain relationships in the business world and with your peers as well?
Well, I think, there's a saying that I learned a long time ago that, the quality of the relationship is spelled Time. So it's time
Mhm,
spent, right?
mhm.
So I just have been very intentional every year to mark out. So I do this daily. So it used to be like a personal planning day, and then it turned into like a family planning day. But what I do is I figure out, my wife and I will take a day where the two of us just spend it together, planning out, what we want for our daughter. And then I get clear on who are the 12 people that I want to be intentional with time, between friends and family, that I'm going to make an effort, that I'm going to, maybe we fly somewhere, maybe we bring them in to see us, but we're going to meet in person and we're going to be intentional to get some quality experiences. And then who are the mentors that I need to have in my life that can help support me, my growth, where I want to go, and challenge me and hold me accountable to the things that I've set up. And so, and then as a couple, we do that, who are the couples that we want to get time with collectively. So I'll have people that I'll meet with one-on-one. My wife will have people that she meets with one-on-one, but then we'll have the couples that, we get quality, double date or triple date time with these individuals.
That's really cool. I really like that. Um, what have you seen as the most challenging thing about being a public figure in the investment world?
Well, I never thought that. So there was this beauty and this peace and this gift of no one knowing who you were. You know, I used to be in the shadows for a long time. My financials were not public. No one knew anything about me. And so that was really nice because I didn't need anyone to know anything. I didn't care if anyone knew anything. And there was an article that came out in Entrepreneur magazine that kind of unveiled a bunch of things that I didn't know was going to be unveiled. And all of a sudden I had people reaching out to me like crazy. And I mean, my own family didn't know even the financial success that I had had. You know, my parents didn't know, my brother didn't know. So all of a sudden, this is all out in the world for everyone to know. And I didn't want people to know because I didn't want it to change our relationship. You know, it was amazing who all, once that article came out, everyone seemed to come out of the woodwork and wanted to connect. And so it was interesting. So for me, I love that my strategies and content has become mainstream enough that people can implement it and they can have impact, that you know, the content, the education can positively impact people. But from the standpoint of, you know, people knowing who I am or knowing more about me, I don't know that I ever want that to be bigger than it is. And in some instances, I'd love for it to be less. So, you know, that's kind of, you know, it's like the pros and cons of having some form of notoriety. I want to have impact, but I don't necessarily need it to be assigned to me or, you know, publicly for people to know that, you know, that it's stuff that I've thought of or I've done or I've tried.
Yeah, that's a very interesting experience. And you touched on it a little bit, but how do you like to give back to the community?
Well, to me, it's about finding. I had a friend and mentor once tell me that if you give to the things that break your heart, it will be the most joyful way of giving. And so I just started thinking about what are the things that break my heart the most? Like what would be the most tragic thing to happen? And those are the organizations, the charities that I like to give to. So to me, nothing's worse than human trafficking, especially if you're a parent. So that's like our number one. But we also love Compassion International. They, you know, you can adopt kids from all across the world that don't have the means or don't have parents or, you know, have parents, but have tough financial situations or in an orphanage. You know, it's eye-opening to see, you know, how good we all have it. Every one of us, how good we have it compared to the rest of the world, to a lot of places, a lot of cultures, a lot of villages, a lot of people just, they don't have anywhere close to the means that we have, even when we might not recognize what our means are and how good they are, because we see others that are doing it differently or doing it better or living a bigger life. And so it's always easy to want more and not recognize how much more we have than most of the rest of the world. So I love the Tim Tebow Foundation. I think they do amazing things in fighting human trafficking. I love Justice International. I think they do as well. So, I mean, those are the three groups that we support the most. And there are others that we will periodically support, but the ones that have our ongoing support are those three.
That's great. Thank you for sharing. Well, what is your vision for the next decade in the investment landscape?
Well, I just want to keep teaching people there's another way, and they don't have to take it, but they might as well know that there's another option. I want to help people achieve financial freedom. I want the programs and products that we do. I mean, we've got online courses and master classes on, you know, investing in mobile home parks or passive, you know, creating passive income. And, you know, we've got all different types of things that exist so that people can have the means, have the tools to be able to do this on their own. So I just want to have impact. And I would love to see more people having financial freedom and living life on their terms.
Yeah, that's amazing. I champion that. And for, you know, the last question, what's your advice with someone starting the investment journey?
Yeah, I mean, really, it's just take one step at a time. Get around people that are doing it, that are doing what you want to do, or that have already done what you want to do. And then just take every day, have a focus of how do I get at least a little bit better today? That's it. The Japanese philosophy of Kaizen, just getting a little bit better, taking one step closer to the goal of financial freedom, or the goal of having your first, focus on the first. What's your first passive income opportunity, and what's your first expense that you were able to cover, and when did you get to survival income, and when did you get to lifestyle income, and so on and so forth. But once you get there, it becomes a game, and you have surplus income, and there's so many things you can do, and so much impact you can have, and you can have impact along the way. And you don't have to solve for money to pivot to using your unique gifts and talents in a way that is fulfilling and elicits and evokes this passion inside of you. But for most people, they do mentally kind of need to check the box of, all right, finances are solved. And that gives them the space to breathe and think and figure out, how they want to spend their time.
That's amazing. Thank you so much, Justin. Where can we find you?
So go to lifestyleinvestor.com. Everything we do is there. I've got tons of free stuff, from a blog to a podcast. There's the book. You can get that on Amazon, or I think there's some different links on our website to it. And then online course, a couple master classes, a mastermind. Everything we do is there. And for anyone that's interested in how to take the next step, they can go to lifestyleinvestor.com/strategy. And for anyone in your network that wants to do that, it's a free call with someone on our team that can kind of steer them in the direction of what might be a great next step for them.
That's amazing. Thank you, Justin. We appreciate you coming on and spending time with us. And we hope to have you on in the future. So thank you again for coming.
Thanks for having me, Julian.
Thank you.